Hello and welcome to Cloud Speed by Deloitte. In this regular podcast series, we'll delve into the world of cloud, answering some of those tricky questions, getting to grips with all that cloud has to offer, and keeping you up to speed on recent developments. So let's begin, shall we? Here is your host, Arti Balakrishnan.
Hello, everyone. Welcome to the next episode of Cloud Speed by Deloitte. We're now into season 6 and are starting off with our first episode for the series. This is your host, Arti Balakrishnan, a partner in our cloud and engineering practice. We talk about digitization and cloud a lot in this podcast. For a change, we're going to talk about how compliance has an impact on the digital age in this episode. Joining me, Fiona Ban and Suchitra Nair. Do you want to introduce yourselves?
Hi everyone, it's great to be here. My name is Fiona Ban. I'm an Associate Director in Technology and Digital Risk Advisory at Deloitte, and I work with financial services firms to ensure appropriate governance and risk and controls are in place to leverage cloud capabilities and comply with regulatory requirements. A bit of a fun fact about me, I like to play rugby, so I play in a mixed team twice a week and represent the London region.
Thanks, Fiona. I didn't know you played in a mixed team. That's great to hear. And Suchitra?
Hi, I mean, that's quite a hard act to follow, isn't it? I'm Suchitra Nair. I'm a partner in Deloitte's EMEA Center for Regulatory Strategy. Essentially, we're a think tank that looks at the regulatory horizon and helps firms to understand the strategic impact. As we know, regulation has very many strands to it, and it rarely comes in a silo. And what we help firms to do is to join the dots and translate what those supervisory expectations are. We do a lot of thought leadership, but we also help firms to design some of the solutions that they develop in the digital and resilience space. And fun fact about me, I don't play rugby. I admire those who play rugby. I'm more of a badminton player. I've played it all my life, took a 20-year break, and then now I'm back to playing badminton and loving it and feeling young again, which is brilliant.
That's great to hear. I think getting out of COVID has only reinforced the value of outdoor activity for all of us. I myself have taken up to marathon walks, anything that'll keep me outdoors for a longer period of time. I really do enjoy. But getting back to the interesting topic at hand around compliance in the digital landscape, before we do a deep dive into it, how do you actually see the compliance and control landscape evolving?
I'm happy to go first. For me, the interesting shift, if you like, is it's gone very much from a risk management perspective and a broader view to managing risks that come with digitization or adoption of the cloud to much more of a resilience framework where there's a greater shift to understanding what happens if things go down. Rather than prevention, it's much more a mitigation story and a shift. And therefore, for firms, you have all these controls around trying to work towards your kind of preventative world. And now they have to essentially look at both worlds and make sure that the system works for both preventative and resilience when it comes to things like the cloud or digital channels. So that's the big shift for me.
I think with the changing regulatory landscape, we're also seeing specifically from a cloud perspective that in the financial services sector, they're developing cloud-specific risk and control frameworks that comply with the changing regulatory landscape. So traditionally, these firms would have leveraged existing technology, cyber or third-party risk frameworks, but they're seeing now that these traditional frameworks are not working or able to adapt to the changing regulatory environment. And I guess from a controls perspective, what we are seeing is with firms that have been using cloud for quite some time, if not already have implemented automation or automated controls and automated monitoring of controls performance as well.
Thanks, Fiona. Just reflecting on the cloud specific regulations, would be helpful if you could sort of signpost some of them.
So operational resilience and third-party risk has been a key focus across the EU and the UK over the last 5 years, and it will continue to be so over the next few more years. Our regulators have repeatedly stressed that it's concern over the financial services sector's risk management capabilities, particularly with respect to non-bank counterparties, such as cloud service providers. So supervisory teams will expect to see progress in managing these risks with a clear focus on firms stress testing exposures to counterparties to understand different risks which may crystallize in a crisis.
Agree, Fiona. I mean, so just in terms of how has the regulation evolved, I think the one point I would add is that where we saw previously an overarching requirement to think about third party and outsourcing as part of your broader IT risk and controls and the early stages of op resilience in third party and outsourcing, we're seeing a much greater emphasis on the more granular view of concentration risk. So if you think about it, the maturity of both industry and regulators are developing as people get a better idea of how services are delivered out to the cloud. And with that maturity comes changing supervisory expectations in terms of what is important and where the focus falls. So I think what we won't see perhaps are more detailed regulatory requirements, but rather a maturity around more granular assessments of how concentration risk manifests at business line level, service level, etc. I think it's a supervisory shift that we're heading towards. The other dimension that's crucially important as well is the fragmentation in the international landscape. We've got the EU requirements coming through. The US are a little bit behind. So we will undoubtedly get fragmentation either in terms of detail or timing. And so for firms looking ahead around compliance, they'll just need to factor that in both at a local level, but also a global level.
Building on that, Sujitra, and point you mentioned previously around risk mitigation, the other side of that coin is also the risk appetite. So while meeting these compliance and regulatory requirements, what is the right operating model for organizations to adopt?
It's an interesting question because I was at a CRO dinner and we were discussing exactly this. And the consensus view is that there's no right operating model and in terms of a standard framework. It has to reflect how the organization operates more widely around risk management and how risk management is delivered across the three lines of defense. So we know, for example, some firms have a heavy first line presence. There are a lot of IT risk and control specialists sitting in the first line, whereas for some others it's concentrated in the second line. So anything around the cloud and digital has to mirror that to make it an effective target operating model. But going back to the shifts in the supervisory expectation, what we definitely see is greater accountability at the C-suite and board level. Previously, where perhaps a lot of these risks and controls were led by IT and the technology folk, it's no longer just their domain. For boards have to review and challenge your resilience plans, your risk tolerances around IT disruption and failures. So what we do see is a broadening of oversight and accountability at the senior levels, which will of course funnel into individual responsibilities being delivered by perhaps technology folk. But it's important to understand actually a much broader, more senior set of stakeholders will be involved, which makes it slightly harder for IT to tell their story and therefore perhaps requires better MI and communication to make that operating model work and to make sure everyone's in sync and agree with, for example, scenarios around resilience and tolerance.
And I think that's reflective of what we're seeing with the clients that we're working with today as well. So typically you see three key types of operating models. So there's a centralized model with a single risk appetite that would consist of a set of metrics to monitor the risk appetite statement and a single set of tolerances and thresholds for each metric. But what we find is a centralized operating model may be difficult for an organization that operates a hybrid or a decentralized model because it might not reflect the different risk thresholds for different parts of the business, such as an investments arm or a retail arm of a business.
Thanks, Fiona and Suchitra. But just taking a slight detour, a point that you mentioned earlier on automation, Fiona, sparked another question in my head around how does automation and particularly AI and generative AI fit in this evolving landscape?
So I personally haven't seen AI being used for compliance. It's not to say that you can't, it's just not where, I guess, the maturity of where the market is today. What we are seeing a lot of is implementation of automated controls and automated monitoring of the controls performance themselves, and a big push for controls by design in the environments.
Yeah, just to add to that, to provide some more regulatory context, again, the regulation around AI is at a very early stage. We've got some initial thoughts from various regulators, but there's really no guidance in terms of how to use AI for risk management. There are some firms who use AI for delivering compliance, for example, using sentiment analysis when they take customer calls and then diverting it to a human if it's a more complex case, or dealing with it in a more automated fashion if it is a more straightforward solution. But stepping back in terms of our firms using AI and generative AI at scale to deliver compliance or risk management, not yet. Are they exploring? Yes, definitely in certain areas like model risk management for certain niche areas. There are pilots in place to explore whether AI solutions and machine learning solutions can better deliver risk management capability. But again, it's an area where you have to watch this space. We have the EU AI Act coming out, well, which is still being debated and will settle in the next 12 to 24 months. The UK as well has set out some early thoughts on their position on AI. So on this one, the regulatory landscape will definitely evolve over the next 2 to 3 years and will provide the clarity, or in fact, clarify where firms will really struggle to meet those requirements to fully embed AI or indeed generative AI into their solutions.
Thanks, Suchitra, and thanks, Fiona. I'm quite interested in dealing with the crux of compliance in the digital age, which is how do you get from design to execution quickly? I'm also keen to understand of the various operating models you described earlier, Fiona, what would work best. Suchitra, maybe if you'll start us off.
Yeah, sure. I mean, I think we've had so many conversations around this in terms of where are firms getting it wrong when they start marrying design with compliance. And if I think about some of the clients who come to us, which is we've done the design, we need to get regulatory permission around it, but we need to go now. What they don't factor in is that the regulator will probably need a fair few months to kick the tires on the design, and you might need to change the design. So I think to get quickly from design to execution, it's important to take the supervisor along with you, share early thinking around plans, ensure that the due diligence that you're going to do around the platform and how it operates, how it might operate after is in line with both the firm's risk appetite, but also the regulator's risk appetite. I mean, we recently had an FCA enforcement for a large regulated firm where the SMF responsible was personally penalized. There was a fine, and the regulator very clearly set out that the SMF hadn't done enough due diligence on whether the third-party platform would operate effectively post-migration, and had given assurances to the board that the platform would operate effectively. So you can very quickly see how the regulator thinks around where the risk might manifest. And those are the kinds of questions that will come up very early on in the design stage. So thinking around how is this going to fail? Have we thought about this in the design consideration? Will just make that conversation a lot quicker and easier if that's being built and considered in the design stage. And then moving through to execution, again, we talked about this, Artie, in terms of often life happens, plans change, you don't go with the original design, you need to tweak it. It's again thinking about what matters to us from a risk management perspective, what would matter to the regulator from their own view of the world. After all, they're here to protect markets and customers, and really thinking through how the changes will still deliver to those risk management principles and what the regulator will care about. And again, communicating that in a very strong and effective way. I think what doesn't work, what we've seen again, is retrofitting compliance into design because it's just not built to absorb those changes. You get a number of tactical fixes that then don't deliver later in this execution pipeline. So it's really key to just mirror, think about those regulatory considerations through the design stage, through your communications with the regulator early on, and when changes happen, to really kick the tires on the design and changes and communicate those effectively to the regulator. So you're taking everyone along in the journey with you, which makes that conversion from design to execution a lot quicker.
Just to echo what Suchitra just said, it's essential to have appropriately skilled risk and control specialists that have an appreciation of the cloud services that are being adopted, and ensure that these specialists are going on the journey with the cloud program so they could pivot and adapt to the changes in the journey itself. And it's really important that regardless of the operating model, be it a hybrid, central or decentralized operating model for the organization, that appropriate governance, leadership and oversight is in place. And that may be from governance to the cloud and ongoing governance in the cloud and over the third party.
Thanks, Fiona, for that. How can the industry come together to enable compliance? I know, Suchitra, there are a lot of groups already present. So, for organizations looking to get a primer on compliance in the digital age, looking to get engaged in the industry, how would you recommend they go about it?
This is a very interesting question. I've seen a lot of industry groups run operational resilience. If you go to any kind of technology and innovation conference, they always talk about, we don't need more regulation, industry should come out with standards. But what we've also seen is that it's very hard for industry to agree standards when they come together. For example, some trade associations have attempted to think about what pooled audits might look like for financial services providers who use cloud services, for example. And often the challenge becomes, it goes back to my target operating model point, because the infrastructure and the target operating model is so different and unique. And the way a firm uses cloud services, for example, is so unique, and how it interacts with the legacy systems and their own resilience plans in terms of, do they go to hybrid? Is it multi-cloud? It becomes very hard then to standardize things at an industry level. But there's still room, isn't there, for a basic set of controls or a basic pooled audit to be done. And I think that's an area that will be further explored. The regulator's been very open around pooled audits and exploring how that might look like. So I think, going back to my initial observation, that when it comes to industry solutions and the regulatory stance towards it, we are on a trajectory. We are very early on in that life cycle of what good looks like. Firms are still trying to understand what levels of exposure they have to third parties, because for the first time they're pulling together outsourcing registers, and for the first time the regulator will have a view as to what's that consolidated exposure of, for example, financial services to a single provider or a concentrated set of providers. So once all parties have a better view of what is the risk for the system and how do we want to control it and what is it that we can accept, then we can move forward with thinking about, right, what does good look like from an industry solutions perspective? Do we need to create a utility, for example? Do we need to pull in an independent party who can do a set of assurance tests for us? Do we move to the cyber type model where we do an industry-wide exercise with a cloud service provider in a live environment and see how a resilience incident might flow through and affect multiple parties? So there are some very good use cases industry can draw from the cyber world, but also you need a bit of time for people to really understand what's the landscape, where are the risks, how are the interdependencies flowing through the system when you have concentration to certain third parties. And then that can help move the debate towards, can we come up with some industry solutions that will drive some efficiency, that will save some costs in the system, and what does good look like? I think we need to give it a bit of time. There have been some unsuccessful initial rounds of exploration around pooled audits, but the debate continues. And I think there's a chance for all of us actually to contribute to that debate, to think about that debate in terms of, in a more digital, in a cloud hosted environment, how can we actually deliver to both regulatory objectives, but also firm objectives? At one level, they're aligned. You want resilience in the system, you want to manage risk. So I think that is going to be a continuing debate, and I think it'll be more refined as understanding on all sides mature.
Thanks, Suchitra, for such a comprehensive overview of how to engage with the industries and the challenges and nuances around it. Clearly, we've tried to tackle a very complex topic in a very short time. Thank you so much to both of you for joining me in this podcast.
It's been a pleasure. Thank you for inviting me.
Thanks for having me.
Thanks again. As part of our endeavor to keep you up to date with developments from major public cloud providers, this week we will have Sundar Ramaswamy, our cloud ambassador. Over to you, Sundar.
Thanks, Arati. That was a very interesting conversation and particularly relevant in this digital age, as compliance has become increasingly important for organizations utilizing cloud services. As the Google Cloud Ambassador, I specifically wanted to touch upon some of the robust features and tools provided by Google that greatly assist in meeting various compliance requirements. To begin with, Google Cloud provides a wide range of compliance certifications and attestations, such as ISO 27001, SOC 2, and HIPAA, for organizations to meet the necessary standards for data protection. Google Cloud's infrastructure offers advanced security controls, including encryption at rest and in transit, which help protect sensitive data from unauthorized access. The Cloud Key Management Service allows organizations to manage and control encryption keys, ensuring data confidentiality and integrity. For industries that deal with personally identifiable information or PII or protected health information PHI, Google Cloud offers specialized solutions to facilitate compliance. For example, Google Cloud Healthcare API provides a framework for managing healthcare data in a secure and compliant manner, adhering to regulations like HIPAA. Data privacy regulations such as GDPR and CCPA require organizations to handle personal data responsibly. Google Cloud's data privacy tools like Data Loss Prevention API and Cloud Identity and Access Management assist in identifying and protecting sensitive information as well as controlling access to data. Data residency and sovereignty concerns can also be addressed through Google Cloud's global infrastructure. With a wide network of data centers around the world, organizations can choose specific regions to store their data, ensuring compliance with local data protection regulations. Google Cloud's Compliance Manager tool simplifies the compliance process by providing a centralized platform to assess, monitor, and report on regulatory requirements. It helps organizations track their compliance process and provides transparency in meeting industry specific standards. In summary, Google Cloud offers a comprehensive set of products and services that assist organizations in achieving compliance in the digital age. From robust security features and specialized APIs to data privacy tools and global infrastructure, Google Cloud enables organizations to navigate complex compliance landscapes effectively and securely manage their data in the cloud. As always, it's a pleasure to be part of these insightful discussions. Thanks for having me over. Back to you, Aarti.
Thank you, Sundar. That brings us to the end of an interesting episode of Cloud Speed. We hope you enjoyed it. And if you did, do share it with your colleagues and friends on social media and subscribe to be notified when a new episode arrives. To find more about Deloitte's cloud capabilities, do check us out on deloitte.co.uk/cloud. You can connect with me on LinkedIn at Aarti Balakrishnan. And with that, this is Aarti signing off. And you've been listening to Cloud Speed by Deloitte.